All right, let's give you a live look at the markets this morning. The opening bell right now, Wall Street reacting as the tensions continue to explode across the Middle East. Traffic in the Strait of Hormuz at a near standstill this morning. More than 100 ships are now backed up outside of the passage, which handles more than 20% of the world's oil supply. That slowdown, as you know, drives up gas prices, and we're seeing that at home. The national average for a gallon of gas right now jumping to $3.32 a gallon today, up about 7 cents since yesterday, and more than 30 cents higher compared to just a week ago. It's not only the crunch on the U.S. economy that we're seeing today. There's a new jobs report out that shows the U.S. lost 92,000 jobs last month alone. It is a bit of a surprise. Economists were expecting the economy to add about 59,000 jobs. The unemployment rate also ticked up, now at 4.4%. Joining us now, Peter Bernstein, chief economist at RCF Economic and Financial Consulting here in Chicago. There's not a whole lot of good news in anything that I just reported.
Not at all. Not at all.
Let's start with the jobs.
Okay.
Why was that such a surprise?
It was maybe a surprise because January was good. You know, the January numbers were plus 126,000, and people were thinking maybe we're kind of turning a corner a little bit after a very slow 2025, and this just took the air right out of that balloon. Probably the lesson here is the world wasn't as good as it looked in January. It's probably not as bad as it looks in February. Kind of look over several months. We're kind of seeing that same thing we saw in 2025. Slow, very slow job growth, but probably on net, even with these bad numbers in February, a little bit of job growth. And the unemployment rate ticking up, but still not especially high. But obviously, now we're going to look to March and April and see, is February a trend or just sort of this month-to-month volatility?
Right, and then you plop a conflict in the Middle East and all of that.
Yes.
It's unpredictable. Gas.
Yeah.
People are watching gas prices right now. I wouldn't be surprised if you start to see folks hoard gas. Right? line up. It's
maybe
30 cents. We'll see how high
Actually,
it goes.
Driving here, I saw two stations. They had a big difference in the price. I thought one of them didn't get the memo, apparently.
Find the deal.
Right.
How difficult is it? And I mean, as this goes on, we don't know to unwind.
Well, the simple math of it is out of a barrel of oil, you get about 40 gallons of gas. So we've seen oil prices go up about $15 just in the last week or so. That's going to be 35, 40 cents, which is pretty much what we've seen. Typical household buys about 20 gallons a week, so that's $7 a week. If this lasts a few weeks, it's not that big a deal. If it continues and goes even higher and the direction is up, 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 then it starts to really hit people. And of course, people are already strained by a lot of affordability issues. This is one that you know, you don't want to say it's the straw that breaks the camel's back, but there's a lot of, you know, while some of the aggregate numbers are looking okay, there's a lot of weaknesses underneath it. A lot of people are stressed. A lot of, you know, credit card debt going up, credit card delinquencies, things like that make you wonder how many hits to the budget can people take before things start to head south.
And even if people aren't in the markets, right, they're not playing the stock game, they're seeing that, and there's uncertainty in what's going on. The Dow down, I think it was 850 points today. The big slide yesterday. We'll see what today brings. How does that factor in? What are you watching for today?
Two things. You know, the thing about, you know, you've heard it 1,000 times. You know, the stock market is not the economy. It's a part of the economy. It's the corporate sector. But
it's a temperature.
It's a temperature, though. It's like gas prices. It's something that people see. And it's sort of considered a barometer. What we're seeing now is the uncertainty. There's already was a lot of uncertainty, even before this conflict in Iran. So I think a lot of people are there's too many unknowns going forward. And the downside risks seem a lot higher than the upsides. You know, maybe a couple of months ago, everybody was high on all the potential of AI, and that was the dominant market theme. That's not gone away, but all these other uncertainties are really making people a little bit less willing to take the risks that are involved in buying stocks.
Yeah, well, let's try to end on a high note so we don't leave people too depressed. Defense contracts, are there sectors of the economy that might see a boost right now?
Well, the one thing there, obviously, is the oil sector. And the one good thing is the U.S., this is not like in the 1970s when there were these oil price shocks that really hit the U.S. economy. In the aggregate, the U.S. economy is not that dependent on the Middle East oil, and we produce a lot more oil ourselves, a lot more energy from other sources ourselves.
Thank you for watching. Subscribe below and download our NewsNation app right now on your phone, and you will get fact-based, unbiased news for all Americans.